Very good evening, everyone. How are you all? Super fine? Yes. So right now we'll take two accounting standard revision class for CA Inter Advanced Accounting. One is AS9, one is AS5. Today in the morning we have taken two AS28 and AS7. I hope you have gone through that. Let us start AS9. चलेगा? Okay. So AS9 is what? Revenue recognition. So first, what is the meaning of revenue? Revenue is the gross inflow. It is the gross inflow of cash, receivable or any other consideration. Cash or receivable or any other consideration. Cash means it can be cash sales. Receivable means it can be credit sales. Other consideration means it can be exchange sales also. Means you have purchased, you have sold some items, some goods in exchange of some other asset. So that is other consideration. Means non-monetary consideration also. So revenue is the gross inflow of cash, receivable or any other consideration arising in the course of ordinary activities. Now what do you mean by ordinary activities? Ordinary activities has been defined in AS5. So after this we'll do AS5, you will be able to understand ordinary activities also. But to sum up, ordinary activities are those activities which are undertaken as a part of your business that are known as ordinary activities. Got this point? Once again, revenue is the gross inflow of cash, receivable or any other consideration arising in the course of ordinary activities of an entity from either sale of goods or rendering of services or from enterprises or from use of enterprise resources by other, which will yield either interest income, royalty income or dividend income. Understood? So this is the meaning of revenue. Can you repeat with me? Revenue is the gross inflow of cash, receivable or any other consideration arising in the course of ordinary activities of an entity from from sale of goods, rendering of services and use of enterprise resources by other, which will yield which income, interest income, dividend income or royalty income. Chalega? This is the meaning of revenue. Now some clarification has been given that if there is any trade discount or rebate, so trade discount rebate means any discount given on trade date is known as trade discount. So right now we are discussing about trade discount, not cash discount. So any trade discount or volume rebate is also received on trade date only. So any trade discount or volume rebate should be deducted in determining revenue. So therefore if they have said gross inflow, the gross inflow is after deducting trade discount and volume rebate. So suppose 100 is the invoice price, from that will deduct trade discount. The amount after deducting trade discount will be what? Your revenue, will be your revenue. Second clarification has been given that of course entities normally collect some amount on behalf of third party, for example on behalf of government, GST etc. So GST will not be considered as an amount of revenue. So that clarification has been given that entities shall exclude from revenue all amount collected on behalf of third parties such as GST. Third party means government. One more clarification has been given that in case of agency relationship, whenever goods are transferred to agent, an agent will sell the goods on behalf of principal. So in case of agency relationship, entities shall recognize revenue on the entity means what? Agency I am saying, the agent shall include in revenue only the amount of commission. Means the revenue of agent will be only the amount of commission, not the gross inflow, because they will receive the gross amount but their revenue will be only the amount of commission. The amount collected on behalf of principal are not the revenue of agent. Whatever amount is collected on behalf of principal will not be the revenue for the agent. This three clarification has been given. Now what is the objective of this accounting standard? Objective of this accounting standard to identify the timing of recognition, means when to recognize revenue. What is the time for the recognition of revenue. This is the objective of this particular accounting standard. So which is mainly concerned with the timing of recognition of revenue in SOPL of the entity, in statement of profit and loss of the entity. Now for that we need to do this particular timing of recognition in three categories. First was sale of goods, then rendering of services, then use of enterprise resources by other. So first we'll take revenue from sale of goods. So what AS9 says that revenue from sale of goods is recognized when all the following conditions are satisfied. All the following conditions are satisfied. The first condition is what? That seller has transferred the ownership of goods. The seller has transferred the ownership in the goods to the buyer for a consideration. So of course, when the ownership in the goods has been transferred, then only revenue can be recognized. The seller has transferred the ownership in goods to the buyer for a consideration. Or sometime what happened ki ownership is not transferred, but the significant risk and reward which are incidental to ownership has been transferred to buyer. So in that case revenue can be recognized when risk and reward has been transferred to, or significant risk and reward of ownership have been transferred to the buyer. So what is the first condition? The seller has transferred the ownership in goods to the buyer for consideration, or the significant risk and reward of ownership, means which are incidental to ownership, has been transferred to the buyer. Correct. This is the first condition. Second condition, the seller retains no effective control of the goods transferred. However, this second condition is nothing but just an extension of first condition, because when the risk and reward has been transferred, it means the control of the goods has been also transferred to the buyer. Correct. So it is an indicator. When the control has been transferred, it is an indicator that risk and reward has been also transferred. So seller retains no effective control. The seller retains no effective control of the goods transferred. If the control of the goods has been transferred, it means the risk and reward has been transferred. Understood? Then third condition and fourth condition are very important, and this is the condition for all revenue recognition. Means whatever we'll be doing in this chapter, these two conditions will be the same condition for all revenue recognition. So what is the third condition? There is no significant uncertainty regarding the amount of consideration. Means can I say amount of consideration should be determinable, and there should not be any uncertainty regarding the amount of consideration. Correct. Fourth condition, it is not unreasonable to expect ultimate collection. Means it is probable that entire amount will be collected. So it is not unreasonable to expect ultimate collection. Means if you are expecting that collection will not be made, then revenue will not be recognized at this point of time. Revenue recognized only when the amount is collected. Understood? What is the first condition? First condition is what? Can you repeat with me? Seller has transferred the ownership of goods to the buyer for a consideration, or all the risk and reward, all the significant risk and reward of the ownership have been transferred to the buyer. Second condition, the seller retains no effective control of the goods transfer. Third condition, there is no significant uncertainty regarding the amount of consideration. Fourth condition, it is not unreasonable to expect ultimate collection. Understood? Yes sir. Now one point already I have said that in most of the cases when ownership is transferred, it means risk and reward is also transferred, because the transfer of ownership will always coincide with the transfer of risk and reward. But sometimes what happens, risk and reward is transferred at a different point of time and ownership is transferred at a different point of time. In that case, if the risk and reward has been transferred, it means ownership has been, it means the revenue can be recognized. So for that there are some special guidance that we need to understand one by one, and these are only important. Normally in exam question is asked from a special guidance. So can we take one by one all the special guidance? First is that delivery is delayed at the buyer request and buyer takes the title and accept the billing. So what happen normally ki buyer will accept the billing but will postpone the delivery. Means the delivery will be postponed at the request of the buyer. In that case, can I say bill has been made but the possession of goods has not been transferred? Why? Because buyer requested for the what? The delay in the delivery. So in that case what AS9 says that of course the revenue should be recognized when all the risk and reward, all the significant risk and reward has been transferred. But sir, how can we identify? So in that case what AS9 says that if all these conditions are satisfied, then revenue will be recognized. So what they are saying, however the time of sale is recognized, the item must be on hand. If the item is on hand, means goods is already manufactured, it must be on hand. Item must be on hand. Item must be identified, it is already identified, this belong to that customer. So item must be on hand, it means it is already manufactured. Item must be identified that this is belonging to that customer, and the item must be ready for delivery to the buyer. Item must be ready for the delivery to buyer. So if all this condition exists on that day, even though possession has not been transferred, but it will mean that control has been transferred, risk and reward has been transferred, therefore revenue will be recognized. Revenue will be recognized. Whenever in exam question, from exam question point of view, whenever it is given that buyer has requested for postponement or delivery, so we'll always assume that this all three condition has been satisfied and revenue will be recognized, even though possession of the goods has not been transferred. Chalega. Second is why goods are subject to installation, inspection, etc. Means sometimes goods are sold with some inspection or installation. For example, you purchase AC and AC is subject to installation. Then in that case, when to recognize revenue? So what our AS9 says, the revenue should be normally recognized when the customer accept the delivery. And installation and inspection has been completed. Installation has been completed, then only revenue can be recognized. Correct. So when the customer accept the delivery and the installation and inspection has been completed by the seller. But sometimes what happen, installation are not so much complicated. For example, suppose you purchase, I will say, small item for which installation is not complicated. Correct. Now means we can do installation by our own. So for example, you purchase one software, now installation we can do at our point of, means in our way. Installation is very easy of for any software. So in that case what AS9 says, that if the installation is not completed, then revenue can be recognized only when the customer accept the delivery, even though installation is not completed. It means when the installation is complicated, then revenue can be recognized only when the installation is completed. Understood? Yes sir. Then goods are sold on approval basis. Now I hope this point you have already done in CA foundation. Whenever goods are sold on approval basis, revenue can be recognized when goods have been accepted by the buyer. Means it has been accepted by the buyer, that information has been given to seller, the buyer has accepted it, then we can recognize the revenue. Or the buyer has done some act adopting the transaction. Means he has done some act, he has sold that goods to some other party. It means he has done some act adopting the transaction, means the control has been transferred or risk and reward has been transferred. Or the time period for rejection, means some time period has been given for the rejection or approval, that has been expired. Until now the goods has not been returned. It means the risk and reward has been transferred, control has been transferred, and revenue can be recognized. So revenue can be recognized when below the goods have been accepted by the buyer, or the buyer has done some act adopting the transaction, or the time period for rejection are expired. Correct? Yes sir. Now in case of consignment sale, of course revenue should be recognized only when the goods are sold by consignee to the third party. Means till the goods are not sold to the third party by consignee, revenue cannot be recognized. This point also I think you know from CA foundation consignment chapter. Revenue should be recognized when goods are sold to a third party by consignee or agent. Understood? Now goods are sold on cash on delivery basis, COD, cash on delivery basis. In that case what AS9 says, that revenue can be recognized only when the cash is collected. Once the cash is collected, revenue will be recognized. So revenue should be recognized when the cash is received by the seller or their agent. Correct? Now next point is what special order and shipment. Sometimes what happens, a special order is received by the seller. In that case we can recognize, revenue can be recognized when these three conditions are satisfied. So in case of special order or shipment, revenue can be recognized when goods are manufactured. Correct? Second, goods are identified that this belong to that customer, and goods are ready for delivery to the buyer. Correct? So goods are manufactured, goods are identified, and goods are ready for delivery. If these three conditions satisfied, means the revenue can be recognized. Means if you have received some special order, until now goods are not manufactured, then revenue cannot be recognized, even though you have received the consideration for that. Understood this point? Yes sir. Then next point, sale or repurchase agreement. This is very important point. Sale or repurchase agreement. and from my point to be expected in exam, sale as well as repurchase agreement. What happens, sometimes the agreement is designed in such a way कि sale has been done, and on in that contract only there will be one repurchase agreement of that goods, means sale of goods with a repurchase agreement कि the seller will repurchase that goods from the buyer after 2 months, 3 months or 5 months, correct? In that case, what our AS9 says that this is not a sale transaction, this is a financing transaction. This is not a sale transaction, this is a financing transaction, understood? So whatever consideration received is considered as liability, it will be considered as liability. And the difference between sale price and repurchase price, suppose sale price was 1 lakh and repurchase price was 1,20,000, means you receive 1 lakh but you will pay 1,20,000, so 20,000 will be interest component because you have used that money for that particular period. So it will be considered as financing transaction, not as sale transaction, and revenue will not be recognized. So when in a contract sale and repurchase agreement both are entered at the same time, then it will not be a revenue transaction, it will be a financing transaction. In that case, whatever goods has been sold will not be de-recognized from the balance sheet, it will be shown as an inventory in the balance sheet of seller only, because the control has not been transferred, even though the position of the goods has been transferred to the other party. Got this point? So what they are saying, for such transaction that are in substance a financing agreement, the resulting cash flow is not revenue as defined and should not be recognized as revenue. So it will be recognized as a liability, means as a loan, Goods will be shown as inventory in the balance sheet of the seller even if lying with the customer, understood? For this we can take one question right now, but what I will do, I will take all the question at the end. Chalega? Yes sir. Seven point you have understood. This is very important. Next point is what? Sale to intermediate parties. Sale to intermediate parties means distributor, or it can be any other party. Intermediate party. Correct now. So when the goods are sold to distributor, dealer or any other for resale, correct now, normally manufacturer will transfer the goods to retailer and then retailer will do the sale to the end customer. So when the goods are transferred to distributor, so of course can I say they are the buyer for the manufacturer. So in that case, of course, revenue will recognize when the significant risk and reward has been transferred. So revenue from such sale can be generally recognized if significant risk of ownership have been transferred. But sometimes you need to cross check whether that distributor or dealer are acting like an agent. If they are acting like an agent, then this will be a consignment transaction, consignment agreement, and then revenue can be recognized only when the goods are sold to the third party. Then we need to wait for the sale by the distributor to third party, understood? So however, in some circumstances the buyer may in substance be an agent. Buyer means what? Distributor, dealer may be an agent, and in such case the sale should be treated as a consignment sale. Got this point? Point number 8 also you have understood. Come to point number 9. Subscription for publication. Normally when we sell the subscription for newspaper etc., in that case what AS9 says that it should not be recognized as revenue immediately, because that subscription is for a defined period. So it should be recognized revenue over the period of time on SLM basis. Suppose you have taken a subscription for newspaper or for any magazine for 2 years. So you paid the entire subscription amount for 2 years. So that revenue should be recognized over the 2 year on SLM basis. So revenue received or billed should be deferred and considered as advance and recognized on SLM basis over the period of time. Chalega? Yes sir. Then installment sale. Whenever there is installment sale, in that case whatever consideration, whatever amount you will be receiving on deferred basis will include some interest element. So because the ownership has been transferred, risk and reward has been transferred, revenue should be recognized, but excluding that interest component. So can I say, because now you know about the present value concept. So in that case I will just give you one formula. Revenue will be equal to present value of future, present value of all installment at a given market rate of interest, correct? Means whatever market rate of interest is given, we can discount it, and that present value will be the amount of revenue. That present value will be the amount of revenue, correct? So whatever consideration you receive in future minus present value will be the interest element, and the interest element will be recognized over the period on proportionate basis. Over the period on proportionate basis. So when the consideration is receivable in installment, revenue attributable to the sale price exclusive of interest, understood? Exclusive of interest means present value, should be recognized at the date of sale. The interest element should be recognized the revenue proportionately to the unpaid balance due to the seller over the period of contract. Over the period of contract, this becomes the entire discussion about revenue, from revenue arising from sale of goods. I hope you have understood, correct? Any doubt? So these all points, 10 points are very important. 10 points are very important from examination point of view. Question can be asked from these particular points. चलेगा? बोलो. Have you understood? Now let us come to rendering of services. Rendering of services. So rendering of services, whenever there is some service has been rendered, in that case revenue will be recognized when three conditions are satisfied. When there are three conditions and the three conditions are satisfied, revenue recognized from rendering of services. First condition, revenue from service is generally recognized when the services are performed. When the services are performed. So once the services is performed, recognize revenue, correct? So revenue from service is generally recognized as the service is performed. Now AS9 has given two methods for recognition of revenue. One is known as completed service contract method. One is known as proportionate completion method. Normally if in a service there is only one act, and when that act is completed, recognize that revenue. But there are many services where there are multiple act. In that case, can I say once one act will be completed, we need to recognize proportionate revenue for that. Therefore they have given proportionate completion method, correct? So they have given two methods. Revenue should be recognized either under the completed service contract method or under the proportionate completion method. So this is when the service includes single act. When the service includes single act. This is when service include multiple act. Understood? Have you understood? The first condition is what? Revenue from services are recognized as the service is performed. It can be recognized by using completed service contract method or by using proportionate completion method. Chalega. Second condition and third condition are same as what we have done for sale of goods. The last two conditions, there is no significant uncertainty exists regarding the amount of consideration, and it is not unreasonable to expect ultimate collection. It is not unreasonable to expect ultimate collection. Means there is no, means can I say, we can say in this way, there is significant certainty regarding the amount of consideration. Means you know the amount of consideration, and it is reasonable to expect ultimate collection. Means it is probable that entire amount will be collected. It is probable means chances are more than 50% that amount will be collected. But if you are unsure about the amount of collection, if you are unsure about the collection of that amount, then we need to postpone the revenue recognition. We can't recognize the revenue at the time when, even though point number A and point number B, that conditions are satisfied. Understood? Yes sir. Special guidance. Installation fee. So normally sometime what happen, we provide installation services. In that case, the revenue from installation services will be recognized when the installation is completed. Correct? So revenue should be recognized as revenue. Means the consideration should be recognized revenue only when the equipment is installed and accepted by the customer. Chalega. Advertising commission. Now normally what happen, advertising agency will receive commission for providing advertisement. So what they want to say in that case, that commission will be recognized revenue when the advertisement came before the public. Means when it is displayed to the public, then the commission income of that advertisement will be recognized as revenue. Correct? So in simple word, commission income will be normally recognized when the related advertisement or commercial appear before the public. Once it is appear before the public, it means the service has been completed. Recognize that commission income as revenue. Chalega? Yes sir. Insurance agency commission. Normally, you know that insurance agent will sell the insurance policy. When to recognize that commission, and they will get commission for that. So when to recognize that commission? So what AS9 says that in this case, commission income is recognized when the insurance policy will commence or renewed, means when it will be commenced. The date of commencement will be the date for the recognition of revenue. So insurance agency commission should be recognized on the effective commencement or renewal date of related policy. When the insurance policy will be commenced, from on that date entire revenue will be recognized. Then financial service commission. Financial service commission means suppose you are arranging loan for third party, means you are arranging loan, means you are dealing with the bank for the other party, and you are trying to obtain loan for the other party. The other party will give you some commission, that is known as financial service commission. In that case, that commission income will be recognized only when the amount of loan has been arranged. When the amount of loan has been arranged means the service has been completed. Yes sir. So in this case, revenue should be recognized when the loan has been granted. When the loan has been granted. Chalega. Admission fee. Admission fee means whenever some event occur, so you charge some admission fee for that event. Admission fee for that event. So in that case, revenue will be recognized only when that event will occur. Once that event will occur, the entire revenue will be recognized. Entire admission fee will be recognized as revenue. So revenue from artistic performance, banquet, other special events should be recognized when the event take place, when the event occur. Chalega. Tuition fee means our fees, correct now. So AS9 says that tuition fee should be recognized over the period of instruction. Over the period of instruction. Suppose I am providing tuition for the 3 months or 2 years, so it should be recognized over the period of instruction. Over 3 months, yeah, over 2 years. Understood? Yes sir. Chalega. So this we have done with the revenue from services also. So I hope you have understood revenue from sale of goods, revenue from services. Chalega. Any doubt? No doubt. Now let us come to the next point. Use of others, used by others, enterprise resources. Means our resources are used by others. For example, just try to understand, we have some intellectual property. So I have given my intellectual property which will be used by you. Suppose I have developed some software, so you will use my software. In that case, I will receive some royalty income for that. So how to recognize that royalty income? Or can you say I have given some loan to you, so my resources are used by you, so I will generate some interest income. In that case, how to recognize that interest income or dividend income? Chalega. So revenue should be recognized. In this case, what AS9 says that revenue should only be recognized when there is no significant uncertainty as to the amount of measurement or amount of collection. Means same to that two condition, means there should not be any significant uncertainty regarding the amount of consideration, and it is not unreasonable to expect ultimate collection. Correct now? It is not unreasonable to expect ultimate collection, means there is no significant uncertainty as to the measurability or collectability exists. Then only we can recognize the revenue. Correct? Then interest, what they are saying, interest. So interest income can be recognized when on a time proportionate basis, considering the amount outstanding and the rate applicable. So on time proportionate basis, for example, you have given loan of 10 lakh and the rate of interest is 10%, and you have given loan for 6 months. So we'll do 6 by 12. So this will be the amount of interest income. We are doing this from bachpan, correct now. So nothing special point. Royalty, what they are saying, it will be recognized on accrual basis in accordance with the terms of relevant agreement. Means it will be recognized on accrual basis as per the terms of agreement. Means whatever mentioned in the agreement, based on that, the royalty income will be recognized as revenue. Understood? Dividend income. What AS9 says, that dividend income is recognized when right to receive payment is established. When the owner's right to receive payment is established. So dividend income, dividend will be recognized revenue when owner's right to receive payment is established. Can I say, as per Companies Act, the right to receive payment will be established only when the dividend is declared by the company. When the dividend is declared by the company. So once the dividend is declared by the company, can I say, then investor have a right to receive that dividend. At that point of time, revenue from that dividend, means dividend income, can be recognized as revenue. Correct? So we all know that final dividend is declared, means final dividend is declared at the time of what? AGM or board of directors meeting? At the time of AGM. by the shareholders. Similarly, interim dividend is declared in board of directors meeting by directors only. So it means final dividend will be declared in case of by shareholders in AGM. So that point of time we can recognize the dividend income, which is final dividend. An interim dividend is declared by the directors in their meeting. Correct now. So at that point of time we can recognize interim dividend as revenue. Got this point? However, we all know that proposed dividend, no right is established, because proposed dividend there is no obligation to pay dividend by the company, therefore no right is established, therefore proposed dividend cannot be recognized as a revenue. Understood? So they are given right to receive payment is established when dividend is declared by the company. In case of proposed dividend, no right to receive dividend is established. Chalega? Yes sir. So we have completed this point number 5 also. Use by others of enterprise resources yielding interest, dividend or royalty income. Chalega? Now this point number 6 is very important from examination point of view. Effect of uncertainties on revenue recognition. Effect of uncertainties on revenue recognition. What AS9 says that when the sale of goods has been done or service has been performed, at that point of time, if there is any uncertainty regarding the collection of the amount, correct, means if there is some uncertainty regarding the collection of that amount, then we should not recognize the revenue at that point of time, and the revenue recognition should be postponed till that condition is satisfied. Understood? So whenever we have a doubt regarding the ultimate collection, in that case revenue recognition is postponed, and it will be recognized as revenue only when that condition, means whenever the amount is collected or whenever there is a certainty regarding the amount of collection. Understood? So what they want to say, whenever the ability to assess the ultimate collection with reasonable certainty is lacking, whenever the ability to assess the ultimate collection with reasonable certainty is lacking at the time of raising any claim, revenue recognition is postponed to the extent of uncertainty involved. In such case, it may be appropriate to recognize revenue only when it is reasonably certain that ultimate collection will be made or the entire amount is collected. Whenever there is no uncertainty as to ultimate collection, revenue recognized at the time of sale or rendering of services. Means if the third condition is satisfied, then to will recognize the revenue only. Correct? Yes sir. This much you understood. Now sometime what happened, this was uncertainty regarding the collection on that at the time of sale, but sometime what happened, there was no uncertainty at the time of sale, therefore we have recognized the revenue, but subsequently there is some uncertainty regarding the collection of amount. Correct? So if there is a subsequent uncertainty of collection, then what they are saying, already you have recognized the revenue at the point of sale. Correct? Now if there is a subsequent uncertainty regarding the amount of collection, then we should create a separate provision for that. And the amount of revenue should not be adjusted. Means we will not reverse the amount of revenue even though that uncertainty occur in that year only. Correct? So we will not do any adjustment with the amount of revenue, and will create a separate provision for that uncertainty. Means can I say, we'll create a separate provision for doubtful debt. Understood this point? So when uncertainty of collection of revenue arises subsequently after the revenue recognition, it is better to make a provision for the uncertainty in collection rather than an adjustment in already recognized revenue. Chalega. So this is also very important point. We'll take some question based on this, but I hope these 2 points you have understood. Chalega. Means if you want a diagrammatic presentation of that, just try to understand. Suppose this is the date of sale. Okay. If there is no uncertainty regarding the amount of collection, regarding the ultimate collection, correct, then can I say revenue will be recognized if other two conditions are also satisfied at this point of time. Correct? Second, if the date of sale and at this point of time there is an uncertainty regarding the ultimate collection, then it will be postponed. No revenue will be recognized at this point of time. So normally in this case we will wait for the ultimate collection, because when the amount is collected, and suppose the amount is collected at this point of time, if the amount is collected at this point of time, then revenue will be recognized at this point of time. Understood? Correct. Now in the case 1, suppose initially there was no uncertainty, you have recognized the revenue now, but at this point of time there is subsequent uncertainty. Means already you have recognized one journal entry, that receivable, debtor account debit to revenue, yes, sales. Already this journal entry has been done. So at this point of time, we will not reverse the sale. Means will not say sales account debit to receivable. We will pass one journal entry. The journal entry will what? If there is subsequent uncertainty, so can you say we will create a separate provision for that. Correct? Or if it is a bad debt and we know that now the amount is not receivable, then we will say bad debt account debit to receivable. If this is a bad debt, or if we are creating a provision, then we'll pass one journal entry PL account debit to provision for doubtful debt. Provision for doubtful debt. Already I have said this provision is created as per AS4. As per AS4. But what they want to say means AS9 want to say do not adjust this uncertainty with the amount of revenue. Means don't adjust the amount of revenue. Revenue already recognized will not be disturbed. Will not be disturbed. Make a separate provision for the uncertainty regarding the ultimate collection. Got this point? Yes sir. Now we can take all the question, but first read scope. What is the scope of this chapter? This standard does not deal with the following. So this revenue recognition does not, this means AS9 does not deal with the following revenue. It does not deal with the revenue arising from construction contract, because this is covered under AS7. It does not deal with the revenue arising from hire purchase or lease agreement, because this is covered under AS19. Correct. It does not deal with revenue arising from government grant or other similar subsidies, because for this we have AS12. Are you getting? Chalega? Yes sir. And revenue from insurance company arising from insurance contract, for this we have no accounting standard, but revenue arising in case of insurance company is outside the scope of AS9, but there is no accounting standard for that. Okay sir? Chalega. Then examples of item not included within the definition of revenue, means they have just given a clarification that these are not revenue. These are not revenue, these are other income. These are other income. For example, realized gain resulting from disposal of non-current asset. Non-current asset means property, plant and equipment, etc. So any gain on disposal of property, plant and equipment is not a revenue. One clarification has been given. This is understood point. Correct now. Unrealized gain resulting from holding of non-current asset. Non-current asset means once again property, plant, equipment means revaluation gain for holding the asset, means you have adopted revaluation model and there is some revaluation gain, that is also not revenue. That is also not revenue. Correct. Unrealized gain, holding gain resulting from changes in the value of current asset, means if suppose you are holding some inventory and the value of inventory increases, so that is unrealized gain. That is also not a revenue. That is also not a revenue. Realized or unrealized gain resulting from changes in foreign exchange rate, means any exchange gain which is covered under AS11. They have just given one clarification that these are not revenue. These are not revenue. Means for this refer AS11. AS11. Realized gain resulting from discharge of an obligation at less than its carrying amount. For example, you have paid some liability at less than its carrying amount. That is also gain. That gain is also not revenue. That gain is also not revenue. Means this is nothing but discharge of a liability, payment of a liability at lesser amount. So that is also not a revenue. This is other income, will be transferred to PL, but will be shown in SOPL as an other income. So in SOP we write on first revenue, then we write on other income. So revenue means AS9. Other income is, these are the examples of other income. Okay, then last point they have said unrealized gain resulting from restatement of the carrying amount of any obligation, means suppose the carrying amount of a liability was 1 lakh, now you have restated 90,000, so it means there is a gain. due to restatement, though that is also not a revenue. These are all clarification, can be asked in MCQ question. From these which are revenue, from these which are revenue, so all are not revenue, all are not revenue. Okay, now last point, disclosure requirement you can do by your own. So with this AS9 content is completed, AS9 content is complete, chalega? Yes sir, boliye. Now let us come to some questions. We have taken a lot of questions for this because there are very good quality of question, and out of this one question can be asked. First question, Zigato run a food delivery business. Food delivery business. As per the arrangement, Zigato allow customer to order foods from the local restaurant and is responsible for the delivery of food within the stipulated time. Means they are a delivery business, they are into delivery business, not restaurant business. During a particular year, it collect money on order made online as under. Total price of food item is 200 lakh. Delivery charge is 60 lakh. GST 40 lakh. Total is 300 lakh. Zigato has received 300 lakh for the above order from the customer, and the order we are delivered to customer at stipulated time. How much revenue should be recognized by restaurant and how much revenue should be recognized by Zigato for the year? Can I say restaurant is responsible for making the foods and then giving it to Zigato? Correct. It means, can I say their risk and reward is transferred once it is given to what Zigato, and their amount of revenue is 200 lakhs. 200 lakhs. Understood? Their amount of revenue will be what? 200 lakhs. However, can I say for Zigato, because they are responsible for delivery of goods, so they are receiving only 60 lakh for that. So their revenue will be 60 lakh, and GST whatever they are recovering from the customer is actually belonging to the government. That is not a revenue. That is not a revenue. That is only given. You can see the revenue for Zigato therefore is 60 lakh, whereas the revenue for restaurant will be 200 lakh. It may be noted that GST of 40 lakh is a liability payable to the government, hence it does not form part of revenue. Can you read the answer? Yes sir. Question number 3. AB sells goods CD on 1st Jan 2001 for rupees 2 lakh. So AB sells some goods to CD on 1st Jan. After the sale was made, CD is having significant cash flow issue. Means after the sale, this is subsequent uncertainty regarding the ultimate collection. Abhi we have done. It is trying to raise funding through bank loan to be able to run its operation in future. However, it is unable to do so and has gone under liquidation on 15 March. So this is subsequent uncertainty. They went into liquidation, means now it become bad debt. At the time of sale, there was no reason for AB to believe that it is not able to collect the amount from CD in future. Means on 1st Jan, there was no means it is not unreasonable to expect ultimate collection. Means that condition was satisfied for revenue recognition. Explain how recognition revenue be done by AB for the year ended 31st March 2001. Can you say on 1st Jan 2001, because all the conditions for revenue recognition for sale of goods was satisfied, therefore revenue recognized on 1st Jan 2001, and therefore they will pass one journal entry, receivable account debit revenue 2 lakh. But there is a subsequent uncertainty regarding the ultimate collection on 15 March. So on 15 March they will create a separate provision without adjusting the amount of revenue. Therefore journal entry will be bad debt to receivable 2 lakh on 15 March. Chalega? Yes sir. Question number 6. On 1st Jan 2001, Messrs KJ sells goods at an invoice value of 5 lakh to Messrs TH. At the time of sale, Messrs KJ has agreed to repurchase the good back from Messrs TH on 31st March at a price of 6 lakh. So again, this is sale with repurchase agreement. Therefore it is actually not a sale and no revenue recognized. It is just like a financing transaction. So on 1st Jan, can I say we recognize a borrowing, so bank account debit to loan from TH. Correct? How much? 5 lakh. Now what is the repurchase price? That is 6 lakh. So this 1 lakh will be the interest expense over the period of contract. So on 31st March means from 1st Jan to 31st March means can is for 3 months there will be interest expense of 1 lakh. So on 31st March 2001 they will recognize one more journal entry, interest expense account debit loan. How much? 1 lakh, and the amount payable will be what? 6 lakh. Now on repurchase they will pay the amount. So journal entry will what? Liability account means loan account debit to bank. Loan account debit to bank. How much? 6 lakh. Loan account debit to bank. This journal entry done. Super important. Can be asked in exam. Easy. Super easy. Can we move? Yes sir. Some more question. Question 11. The following information of Meghna Limited is provided. Goods of rupees 60,000 were sold on 20 March, but at a request of buyer they were delivered on 10th 4th. So can you say this is delayed due to request of buyer, and if the item is on hand, item is ready for delivery and item has been identified, then it will be recognized as revenue on 20 March only, because all the risk and reward has been transferred, nothing has been given, that will be assumed only. You can see they have first given the condition for revenue recognition from sale of goods, and then they have case 1, yes, it will be recognized for the year ended 31st March 2002 only. Chalega. On 15 Jan 2002, goods of rupees 1,50,000 were sent on consignment basis, of which 20% of goods unsold are lying with the consignee on 31st March 2020. Means out of 1,50,000, 80% will recognize the revenue. So into 80%, 1,20,000 revenue, and can I say balance will be considered inventory to be shown in the balance sheet as on 31st March 2002. Chalega, I think simple. Rupees 1,20,000 worth of goods were sold on approval basis on 1st 12/2001. The period of approval was 3 months, after which they are considered sold. So the period for rejection they have given 3 months. Buyer sent approval for 75% of goods on 31st Jan 2002 and no approval or disapproval received for the remaining goods till 31st March 2002. You can see for 25%, because it is first 12, 3 months will be expired on 28th Feb only, because December, January, Feb, but they have not given any approval, disapproval till 31st March 2002. So it is the time has been expired, the time of rejection has been expired, therefore the control will be transferred and the revenue recognized for the entire 1,20,000. Chalega? Yes sir. Apart from above, the company has made a cash sales of 7,80,000, trade discount 5% allowed to the on the cash sales. So 7,80,000 minus 5%, how much it is coming? 7,41,000 to be recognized for point number D, 7,41,000 as the revenue. Very simple. Okay, this type of question normally they ask for 4 marks, 5 marks. It is very simple. If you have understood the content, you can write down. Let me take one more question. This is also a good question. For the year ended 31st March 2001, KY Enterprise has entered into the following transaction. On 31st March 2001, KY supplied 2 machines to his customer ST. Both machines were accepted by ST on 31st March 2001. Machine 1 was a machine that was routinely supplied by KY to many customers, and installation process was very simple. Can I say installation process was very simple, and because it was accepted on 31st March 2001, revenue will be recognized on 31st March 2001 only, even though installation process is not completed. Yes sir. Machine 1 was installed on 2nd April, but this is of no use. The revenue recognized only when the goods are accepted by the customer. Machine 2 being more specialized nature require an installation process which is more complicated, requiring significant assistance from KY. Machine 2 was installed between 2nd and 5 April 2001. Details of cost of sales and price are as follow. Now from my point of view, machine 2, even though it was accepted by the customer on 31st March 2001, but can I say because the installation was complicated and installation was completed after year end, therefore revenue should be recognized after year end, means revenue should be recognized for the year ended 31st March 2002 from my point of view. But in the answer they have given that for machinery 2, because it is accepted by the customer on 31st March 2001, therefore revenue should be recognized for the year ended 31st March 2001. But my answer is totally different. From my point of view, in this case for machine 2, revenue should be recognized in the next year, not in the initial year, from my point of view. But you can follow the solution given by ICI, it is your choice. But from my point of view, because the installation process was complicated, therefore we need to wait for the completion of installation process, then only we can recognize the revenue. As per the guidance given under AS9, we will follow the guidance given under AS9 only now. Correct. So in this case for machine 1, what they have said, as the installation process is simple, revenue from machine 1 will be recognized on 31st March 2001. Revenue is 3,20,000, cost of goods sold is 1,60,000, profit will be 1,60,000. Chalega. Since the question specified a machine is already accepted by ST on 31st March 2001, the revenue arising from the sale of machine need to be recognized for the year ended 31st March 2001. This is because the acceptance of machine indicate that risk and reward pursuant to ownership are transferred. Now machine 2, installation process for machine 2 is complicated. requiring significant assistance from KY Limited. However, question specify that machine is already accepted by ST Limited on 31st March 2001, but it does not mean the risk and reward is transferred, because if the installation is not completed, then risk and reward is not transferred. Till it is completed, risk and reward is not transferred. Assuming that there is no further approval or acceptance required from the buyer for machine sold, revenue from sale of machine can be recognized for the year ended 31st March 2001. I am not happy with this. From my point of view, the revenue should be recognized for the year ended 31st March 2002 for the next year. Correct, but you can follow the ICI solution, your choice. So here revenue is 3 lakh, cost of goods sold 1 lakh 50 and profit is 1 lakh 50. But in this case, you can see they have received some installation fee for machine 2. So this installation fee will be recognized revenue when the installation is completed, means in the next year. This answer they have given correct. However, installation fee for rendering installation service cannot be recognized until the installation is completed. Since the machine is pending installation, the revenue in respect of installation charge need to be recognized on 5th April 2001 once the installation process get completed. Chalega? Yes, sir. Question number 14 is also a good question. A manufacturing company has following stage of production and sale in the manufacturing fine paper rolls. So they have given on 15 Jan they purchased the raw material. On 20 Jan the pulp was in work in progress. On 27 Jan rough and thick paper, this is also WIP. On 15 Feb fine paper rolls was produced. 20 Feb ready for sale. Now it become ready for sale. 15 March sale agreed and invoice raised. On 2nd April delivery and paid. Delivered and paid. Explain the stage on which you think revenue will be generated and state how much revenue and the net profit for the year ended 31st March 2016. Now only doubt will come. Either can I say we can recognize the revenue when the sale is agreed and invoice raised, or when the delivery is completed. In these two date doubt will come. Can I say all these dates are not relevant for revenue recognition? Because if it is not ready, if it is under manufacturing process, the revenue cannot be recognized even though amount has been received. So once the sale is agreed, invoice raised and item is manufactured, revenue can be recognized. But sometime what happen, delivery is done by the supplier only, by the seller. So once the goods are not received, can a risk and reward is with whom? Supplier, means seller. In that case, can I say revenue can be recognized? Revenue cannot be recognized on 15th March. Therefore, I will say it is a subjective, because till no information has been given. Let's see what the answer has been given. The sales will be recognized only when two conditions are satisfied. The sale value is fixed or determinable. Property of goods is transferred to the customer. Both these conditions are satisfied on 15 March. Means they have said 15 March. Correct? Means they have given two alternative answers. I will say only on 15 March when the sales are agreed upon at a price and goods are allocated for the delivery purpose through invoice. Correct? So in that case, can I say, in that case, the NRB is what? 3 lakh. NRB is what? 3 lakh 50,000. The revenue recognized at 3 lakh 50,000. And the cost will be 2 lakh only. The cost will be 2 lakh. So they have said what they have said. The amount of net profit of rupees 1 lakh 50,000, that is 3 lakh 50,000 minus 2 lakh, would be recognized in the books for the year ended 31st March 2016. So 3 lakh 50 minus 2 lakh, this much profit they will recognize. Means revenue is 3 lakh 50,000. AS9 is for revenue, not for profit. Yes, sir. However, they have given one alternative answer. However, if the delivery of the goods has been delayed through the fault of seller and the goods are at the risk of seller, as regard any loss which might not have occurred, the revenue should be recognized in the books for the year ended 31st March 2017. So you need to write down an alternative answer. If the delivery is delayed because of seller or delivery is given by the seller, then risk and reward will transfer only when the goods are delivered, and it was delivered on 2nd April. Therefore, revenue should be recognized for the next year, means for the year ended 31st March 2017. Understood these 2 points? Very good question. Chalega? Yes, sir. Question number 24 is also important. A Limited sells goods with unlimited right of return from its customer. Means it is sale with a right to return. Whenever there is a sale with a right to return, then we need to create a provision for the goods which may be returned. for the expected loss. Means any goods which are expected to be returned, we need to create a provision as per the requirement of AS 29. As per the requirement of AS 29. Correct? Understood? The following patterns has been observed in the return of sales. The time frame for the return from the date of purchase between 0 to 1 month. Means it can be returned within 1 month, then 6%. There is a chances that 6% of goods may be returned. This is a probability. 6% of goods may be returned. Between 1 to 2 months, the time frame is 1 to 2 months, 7% of the goods may be returned. That between 2 to 3 months, 8% of goods may be returned. The company has made a sales of 36 lakh in the month of Jan. In the month of Jan. It means, can I say they will come in this category? In the month of Jan, it means only 1 month is left for return. Only 1 month is left for the return, correct? 48 lakh in the month of Feb. So this will come in this category because 2 months is left for return. 60 lakh in the month of March. This will come in this category because only 1 month. 60 lakh in the month of March. Are you getting? 60 lakh in the month of March. So for this 3 months is left for the return. 3 months. Correct. So this will come in this category. Means what they want to say. Just try to understand. I will explain this way. Okay, this is what? March, Feb, Jan. Jan, Feb, March. So Jan how much sales? It is 36, 48, 60. 36, 48, 60. So can I say this will come in what? 0 to 1 month category? Because if you assume that sales has been done yahan par, so within 1 month, correct na? Are you getting what I am saying? Sorry. Time frame for return from date of purchase. Yes, sir. One minute. Yeah. Acha. I have my mistake. It was for unlimited right to return. Unlimited right to return means the goods can be returned at any point of time. At any point of time. Correct. It means 0 to 1 month, the time of return from the date of purchase. From the date of purchase. If the sales has been done in the month of March, so it will come in 0 to 1. This will come what? For Feb, it will come in which category? It will come in 1 to 2 month. 1 to 2 month, and this will come in 2 to 3 month. So for this will apply 6%. For this will apply 7%. For this will apply 8%. 8% means this much. 6% of this may be returned. 7% of this may be returned. 8% of this may be returned. Understood now? Correct. So how to create the provisional amount, that we need to understand. The total sales for the financial year have been 400 lakh and the cost of sales to 320 lakh. But can I say as per AS 9, even though we have sold with an unlimited right of return, but can I say all the condition has been satisfied because risk and reward has been transferred and there is no significant uncertainty regarding the amount of consideration, and it is not unreasonable to expect ultimate collection because all these conditions are satisfied. Therefore entire revenue will be recognized for this year only, but we need to create a provision for that return as per AS 29. So what will be the amount of that provision that we need to calculate? So what they have done, March it is 60, correct? So you can see 60 is what? March is 60, correct? In the month the sale was 60, so for that likely return is 6%. So 3.60 is what? The likely return. Now in Feb, the goods which has been sold in the month of Feb, so can I say in the month of Feb and March, it will be cumulative is what? 108. So Feb and March, the cumulative sales is 108, and for this the likely return is 7%. For this the likely return is 7%. So 7% of 108, the likely return is 7.56. Similarly, the sales has been done in the month of the sales has been done in the month of Jan, 36 lakh. So cumulative sales January, February, March will be 144. 144. Are you able to understand? So 144 will come in this category 2 to 3 months. 2 to 3 months. So this will be 8% and the likely return become 11.52. So kids, this is a likely return. And kids, the provision should be created for profit margin. Profit margin. So these are sales which are likely to return. So what is the profit margin? The profit margin we can calculate how much. So if you see 320, 400, so 80 is the profit, divide by 400 means 20% is the profit margin. So we have created provision at a rate of 20% of this amount, this amount, this amount. This becomes the total amount of provision as per AS 29. This becomes the total amount of provision as per AS 29. Understood? Have you understood? Correct? Have you understood this point? This question? बोलिए. Simple? Yes, sir. To do this question, the same question can be asked in exam. Write must revise question before exam. So a different type of question it is. Now balance question that I have given to some more question that you can do by your own, because similar question I have taken. Correct now. This all question you can do by your own. This similar question I have already explained. So this AS9 is completed from my point of view. AS9 is completed from my point of view. Correct. Now let us come to AS5. Now AS5 is what? Net profit or loss for the period, prior period item and changes in accounting policy. So this AS5 deals with the presentation of SOPL. How to present SOPL, how to present income and expense. For presentation, they have divided all the items into actually 5 parts. First is known as ordinary activities. Second is known as extraordinary activities. Third is known as prior period item. And then changes in accounting policy and changes in accounting estimate. So there are 5 points of discussion in this chapter. The objective is to define all the activities and their disclosure in SOPL. How to disclose in SOPL. This is the objective of this chapter. So standards should applied by entity in presenting profit or loss from ordinary activities in SOPL, extraordinary item in SOPL, prior period item in SOPL, disclosure of changes in accounting estimate and disclosure of changes in accounting policy. This is the objective of this chapter. So first we'll come to ordinary activities. So what do you mean by ordinary activities? What AS5 says that ordinary activities are any activities which are undertaken by the entity as a part of his business, means which are nothing but a part of business, or which are incidental to main business, or which happen because of the business only. For example, if I purchase a camera for recording purpose and if I sell camera after some point of time, even though it is sale of PP, but can you see it is incidental to operation, incidental to business, therefore it will be an ordinary activities. It is not an extraordinary activities. Chalega? So any activities which are undertaken as a part of business or which are incidental, means which happened only because of business, that is what ordinary. For example, if suppose some customer filed a case against the vendor entity, seller entity, so that is also incidental business, so that is also ordinary. That is also ordinary, correct? But out of ordinary, what AS5 says that there are some exceptional items which require separate disclosure. So out of ordinary, there are some exceptional items which require separate disclosure. So what do you mean by exceptional item? That we need to understand. So ordinary item does not require any separate disclosure. But if the ordinary items are exceptional, it requires separate disclosure. It requires separate disclosure, correct? So what do you mean by exceptional item? When the item of income and expense within profit or loss from ordinary activities are of such size, nature or incidence. Means size means amount, nature means the nature of that item, and incidence means impact. that their disclosure is relevant to explain the performance of the entity for the period, then such items are treated as ordinary but exceptional item, and the nature and amount of such items should be disclosed separately. Correct? So whenever any income and expense which are within the ordinary activities are of such size, nature, incidence, there is of such size, nature, incidence that their separate disclosure is required to understand the performance of the entity. It means it is an exceptional item and their separate disclosures are required. Correct? AS5 has given some examples of exceptional item. This is important from exam point of view. Examples of exceptional item. For example, the write down of inventory. The write down of inventory to is NRV. To is NRV. So when we write down an inventory to is NRV and the amount is material, it is an exceptional item. As well as the reversal of such write down, and when you reverse such write down in subsequent period, that is also what? Exceptional item if the amount is material. A restructuring of the activities of the entity and the reversal of any provision for the cost of restructuring. If you done AS29, we have done provision for restructuring there. So any provision for restructuring if you have created, that is an exceptional item, and the reversal of that provision is also an exceptional item. Correct? Disposal of item of PP, any gain or loss on sale of PP. Disposal of long-term investment, any gain or loss on sale of long-term investment. Legislative changes having retrospective application, any changes in act, legislative changes with retrospective application will be exceptional item. Litigation settlement, any settlement of legal cases will be an exceptional item, and other reversal of provision, whenever you reverse provision, that will be always exceptional item. So these are examples of exceptional item which require separate disclosure if their separate disclosure is required to understand the performance of the entity. Correct? Yes, sir. Can you repeat with me all the examples? The write down of inventory to NRV and the reversal of such write down. Provision for restructuring and the reversal of that provision. Gain or loss on sale of PP. Gain or loss on sale of long-term investment. Any legislative changes with retrospective application, litigation settlement, and other reversal of provision. Chalega. Now let us come to extraordinary item. What do you mean by extraordinary? The extraordinary item are those income and expense which arises that are distinct from ordinary activities of business. Means that are not ordinary activities, means that are not a part of business, that are not incidental to business, that are not ordinary activities. Correct? And that are material, of course there should be material, and that are not expected to recur frequently or on regular basis. Means they are not expected to occur on frequent basis or regular basis. Correct? Correct. So one clarification I am giving, that this ordinary item can be recurring, can be non-recurring. This ordinary item can be recurring, can be non-recurring, but extraordinary item will be always non-recurring. A recurring item cannot be what extraordinary item, but a non-recurring item can be ordinary if it is undertaken as a part of business or incidental to business. For example, gain on sale of PP is non-recurring only, but that is ordinary. Correct? So ordinary item can be recurring as well as non-recurring, but this extraordinary will be always non-recurring, infrequent in nature. So what are the three conditions? It must be distinct from ordinary activities. It must be distinct from ordinary activities. It must be material, and it is not expected to occur on frequent or regular basis. If these three conditions satisfied, then that item will be considered as extraordinary item. And for extraordinary item, what AS5 says that the nature and the amount of each extraordinary item are separately disclosed in SOPL, so that its impact on the current year profit can be perceived. So that its impact on current year profit or loss can be clearly perceived, clearly determined. I will show you how to disclose that. Correct. First let us read the content. Then examples are what? Attachment of property of the entity. Attachment of property means sometimes the property are compulsory acquired by the government. So if the property is compulsory acquired by the government, that is known as attachment of property. In that case it become an extraordinary item. Or loss due to earthquake, or refund of government grant as per AS12. Any refund of government grant is always extraordinary item as per AS12. If you remember, we have done. Then prior period item is error. Prior period item is error. So prior period item are the income and expense which arises in the current period, which arises in the current period as a result of error or omission in the preparation of the financial statement of one or more prior year. Means any income or expense which arises in the current year as a result of error or omission in one or more prior year, that become prior period item. Correct. So this prior period item should be also disclosed separately. Correct. The nature and amount of each prior period item are separately disclosed in the PL so that its impact on the current year profit can be perceived. Means the disclosure requirement is similar to extraordinary item. For example, omission of recording of an expense under statement of income due to mathematical mistake in applying accounting policy, means any error will be what? Prior period item if that arises in prior years. Correct? Yes, sir. Correct. Some clarification has been given that prior period items are generally infrequent in nature, but they are not extraordinary. It should be distinguished from extraordinary activities and changes in accounting estimate. The prior period item should be distinguished from extraordinary item and changes in accounting estimate. Correct. Now let us come to changes in accounting estimate. Meaning, changes in accounting estimate. Now we know many estimate. For example, useful life, we have done estimation. Useful life, we have done the estimation. For calculation of depreciation, residual value was an accounting estimate. Depreciation method was an accounting estimate. Provision is an accounting estimate. So changes in accounting estimate, what is that changes? That we need to understand. So changes in accounting estimate means estimate is revised. Whatever estimation we have taken, that has been revised due to change circumstances or condition on which estimation was previously made. Due to change in circumstances or condition on which estimation was previously made, or as a result of new information or more experience or new development, or some new information came, new development came, because of that estimation required changes. Useful life required changes if there is some technological changes in the property, plant, equipment, then we need to change the useful life. Correct. So that is an accounting estimate. So whenever there is a changes in accounting estimate, what need to be done? What disclosure need to be done? What disclosure is required, that we are actually understanding. Examples are changes in useful life or residual value PP. Changes in depreciation method is very important. Changes in depreciation method is not a changes in accounting policy, it is changes in accounting estimate. Be careful. The changes in depreciation method from SLM to RBM or from RBM to SLM is changes in accounting estimate. Changes in the amount of provision. Disclosure is very simple. The effect of changes in accounting estimates should be included in the SOPL of the period of change, means in the year in which changes are made. In that, the effect of changes in accounting estimate will be disclosed if the change affect the period only. However, the period of change and future period if the changes affect both. So normally what happens, the changes in accounting estimate either affect the period in which changes has been done, or it will affect the period in which the changes has been done, or future year also. So the disclosure should be given for that changes either in the year in which changes has been made, or in the year in which changes has been made, or future year. Chalega. The nature and amount of changes in accounting estimate which has a material effect in the current period or in the subsequent period should be disclosed. So nature and amount should be disclosed in the current period or in future period should be disclosed. If it is impracticable to quantify the amount, if you are not able to estimate the amount, the facts should be disclosed. Chalega. Correct. Now one clarification has been given by AS5. Suppose you are not able to distinguish between changes in accounting estimate and changes in accounting policy, then it should be considered as changes in accounting estimate, not changes in accounting policy. This clarification has been given by AS5. Okay, sir. Now coming to changes in accounting policy. Changes in accounting policy means what? When I say accounting policy are a specific accounting principle and the method of applying this principle in the preparation and presentation of financial statement. So this meaning has been given under AS1, not AS5. So accounting policy is defined under AS1. Right now we are doing changes in accounting policy. So okay, changes in accounting policy means what? Either accounting principle has been changed or accounting method has been changed. Either there is changes in accounting principle or changes in the accounting method. For example, inventory is valued at FIFO or weighted average price method. So we have changed from FIFO to weighted average price method, or from weighted average price method to FIFO. This is known as changes in accounting policy. Correct? Got this point? Correct. Circumstances. Can we change the accounting policy? Bola yes, if three circumstances arises. So we can change our accounting policy only when the adoption of different accounting policy is required by statute. Statute means law. when the adoption of different accounting policy is required by law, or for compliance with accounting standard where the adoption of different accounting policy required by accounting standard, or when it is considered a change would result in more appropriate presentation of financial statement, when it is considered that it will give more and reliable more relevant and reliable information to the user of financial statement, or that will result in more appropriate presentation in the financial statement, then we can do the changes. Correct. So can I say these two are the mandatory change when adoption of different accounting policy required by law, or when for compliance of accounting standard. But third one is what voluntary change, that depends upon the judgment of management. Then point number C is also very important. Point number C is very important. The following are not a changes in accounting policy. Following are not a changes in accounting policy. What they want to say? The adoption of an accounting policy for a transaction that are different in substance from previous transaction, means any transaction happening current year which is different substantially from the previous transaction, this is not a changes in accounting policy. Correct. So adoption of a new accounting policy for a transaction that differ in substance from previous transaction, can I say this is not a changes in accounting policy. Correct. The adoption of new accounting policy for a transaction which did not occur previously. So we have adopted new accounting policy for transaction which do not occur previously, that is not a changes in accounting policy. Or the adoption of new accounting policy for a transaction which were immaterial previously. So adoption of new accounting policy for transaction which were not material in the previous year, so of course in current year it become material, so we will adopt new accounting policy only. So these are not a changes in accounting policy, be careful. Correct. So can you repeat with me? The adoption of an accounting policy for transaction that differ in substance from previous transaction. Second, the adoption of new accounting policy for a transaction which do not occur previously. Third, the adoption of new accounting policy for a transaction which were immaterial previously. Got this point? Yes sir. Disclosure is very simple. Any changes in accounting policy which has a material effect should be disclosed in the financial statement of the period in which such changes is made. So any changes in accounting policy which has a material effect should be disclosed in the financial statement of the period in which such changes is made. When the effect of such change is not determinable, the facts should be disclosed. However, in effect of change has no material effect for the current period but has a material effect in the later period, then also facts should be disclosed in the period of change. Then a fact for the changes in accounting policy should be given in the period of change. Examples of changes in accounting policy, for example, changes in the valuation principle of investment. Inventory valuation principle has been changed, means if I say for inventory what cost price or NRV which is lower, now we have decided there is some changes in accounting standard, now we are going only based on NRV or only based on cost, so that becomes changes in accounting policy. Changes in cost formula measuring cost of inventory. Changes in measurement base, means cost model to revaluation model or revaluation model cost model, this is also changes in accounting policy. So this become what? Our AS5. Now if I show the presentation of SOPL, just try to understand. Now first we write down all income. In this we write down revenue, then other income, then we write down all expense. Correct. This is known as profit before exceptional item, extraordinary item, prior paid item and tax. Then first we disclose exceptional item. We'll do plus minus. This will become profit before extraordinary item, prior period item and tax. Are you getting what I am saying? From this we'll adjust extraordinary item, means income and expense. So this will become profit before prior period item and tax. I am just saying how to disclose the item. Then we write down prior period item. This become profit before tax. Then we do tax expense, current tax, deferred tax. This become profit for the year. So can I say exceptional item is disclosed separately, extraordinary item is disclosed separately, prior period item is disclosed separately so that its impact on the current year profit can be perceived. So that was the sentence. The extraordinary item and prior period item should be disclosed separately so that its impact on the current year profit can be perceived. So this format only you have done under Schedule 3. Schedule 3 of Companies Act. Correct. However, in Schedule 3, PPI, this prior period item was missing. However, that Schedule 3 format can be modified as per the requirement of AS5. So AS5 says this. So if there is a prior period item, that will be disclosed after what? Extraordinary item. Chalega. Understood. With this, we have completed AS5. Now, AS5 question you can take by roll. All the questions are given. You can see I have given 1, 2, 3, 4, 5. 5 questions I have given. Come to this question. This question is important. State whether the following items are changes in accounting policy, changes in accounting estimate, extraordinary item, prior period item, ordinary activity. Let us term. Actual bad debt turning out to be more than provision. Okay, this is changes in accounting estimate. Correct. Change from cost model to revaluation model. Right now I have said changes in accounting policy. Government grant receivable as compensation for expenses incurred in previous accounting period. So as per AS12, it is extraordinary item only. As per AS12. So government grant receivable as a compensation for expenses incurred in previous accounting period. So that will be recognized immediately in here as an extraordinary item. This is as per AS12. Treating operating lease as finance lease. Okay, it is an error. So this is a prior period item. Capitalization of borrowing cost on working capital. Okay, this is also an error because this will not be capitalized. So this is a prior period item. Legislative changes having a long-term retrospective application. Ordinary activity, but you can add on exceptional. It is exceptional. Changes in the matter of depreciation, changes in accounting estimate. Government grant becoming refundable, extraordinary item. Applying 10% depreciation instead of 15% furniture, prior period item. Changes in useful life, it is changes in accounting estimate. So this type of question can be asked now in MCQs also. The balance question you do by own. For today this much only. I hope you have understood AS9 and AS5. Chalega. Thank you very much. Today this much only. Bye bye. Take care. Love you all.